Good morning, traders and investors. Dale Sugar Trader Boys. This morning I want to go over a quick little lesson for you. So let's go through and take a look at. We're going to start with the S&P futures, and then we'll also look at the DIA, the diamonds, which is the Dow Jones Industrials Exchange Traded Fund ETF. Right. So let's take a look. Let's switch over to those charts right now. Let me find that page for you. We want this one right here. All right, so we've got the multi-time frame analysis breakdown here, and so we're starting over here on the left-hand side of the S&P futures. This is a weekly chart, and this morning we've just come down. We've hit this little weekly demand here, so this is a buying opportunity in this market where we should get reversal. Now, the mistake a lot of people make is coming into demand is they just buy the demand level. What we want to do to increase probability and increase your success ratio, your win ratio, how many trades you are profitable on, is we want to wait for conviction. So we want to make sure that the buyers are in control of the market. So this is, you hear me say this a lot of time. Well, here's a great trade setup, but we've got to wait for confirmation. We've got to wait for strength in the market, and then we purchase on strength. So a lot of you are watching this and go, I don't understand what that means. What does that mean? So let's do a quick little lesson on this, and we'll look at two different markets to do this. So here's the S&P futures on the weekly time frame, hit demand level. All right, coming down, you can see here, this is the demand level on the daily chart here. Created that massive move to the upside. So now we got a beautiful retracement coming right down to this area. You can see on the 4-hour time frame, hitting that demand area. Now, here's what I want to show you. We're going to come over here into the bottom right corner, and we'll maximize this chart, blow it up for you, make it big. And we're going to look at, well, how do I know I've got strength in this market? How do I know I have strength in this market? So right here, right now, we're on the S&P futures, but we're looking at what we call a .D chart. And what that means is we're not going to see the Globex session. And the Globex session is the overnight trading. So futures trade from basically 6 p.m. Sunday night all the way through 5 p.m. Friday. Right? And there's a clearing session after market close of the stock market. So right here, we can only see, right, the hours of the futures when the stock market's open, right? And this is when the institutions are most active. So yesterday afternoon, we had this area here where we base, and then broke down. So this created a little supply area. So right here, this little supply area is a price area where there's unfilled institutional orders. Right now, what we need to see is for buyers to be in control, we've got to get through and above that supply area before we take any type of actions. Right? If we jump into this trade too early, what can happen is we come up, we hit the supply area, and then it breaks down, comes down, hits your stop loss, and you take a loss on a trade that you should never have even entered just yet. So what we have right now is we have broken above the supply area. So what that tells me is the buyers have greater strength and greater control and greater power. And now if we go down on a small time frame, you're going to see right here, this little candle here in the 15-minute time frame becomes a base on a 5-minute chart, and that's the supply area we hit that we're reversing off. Right now, a couple of things can happen. So what do we do to get long? What do we do to get long? And going long the market means trading in the upward direction of the markets, right? So how do we get long this market? How do I enter into this to buy on strength? Well, a couple of things we can do. Right? We can wait for it to come all the way back down to this demand level, and that's highly probable, and that'd be a great area to get involved in this transaction, because coming in where we've got confirmed buyers, right? Institutions are buying here. That's the only way these major markets can push all the way up. Now you can come in here, stop loss below here. Now you've got a lower risk with a higher reward. Right? So your risk reward ratio is going to be phenomenal there. Right now, if we go to a smaller time frame, and I'm not a big advocate for a smaller time frame, so we're going to come down to a 5-minute chart, because on a 5-minute time frame, we can use this for entry purposes only. Here's what you can see is there's a supply area that I was just talking about on the 15-minute time frame that reversed this market to the downward direction. Now right here is we've got a rally base, right? Rally. Now why did it go up? Because there was no more sell orders. Now if there's no more sell orders, there's unfilled buyers right here. Right? So we could look at this area right here as a demand area to look to get long. Now again, you could just take the trade. You just take the trade here. Right? And go for it. Now, if you do that, your entry will be closer to your stop. You'll have less risk in the transaction, but what you won't have is the odds stacked for you. You won't have greater probability in your trade. So, well, what do I do? What do I do to get greater probability in the transaction? We wait for a commitment of strength. Right? We wait for a commitment of strength. So, what does that mean? Well, right now, all you can see is red candles. Red candles, red candles, red candles. You can see the current price is very close to the low of the candle. What's that telling me is the sellers are currently in control of this market. Right? The sellers are currently in control of this market. So do I want to enter right now? No, I don't want to enter right now, because if I enter right now with the sellers in control of the market, the odds are stacked against me to lose money, to have a losing transaction. So I don't want to enter right now. What I want to wait for is ideally a small body candle right here. This will be the best case scenario. A small body candle to form right here. Right? And then if it breaks to the upside above that candle's high, take the trade. Now, if we don't get that, and it's very possible we won't, what I can do is I can wait for it to break above this 32.2750 area here, above this candle's high, right? And that would then be called what we call a confirmation entry. Right? So you can take the trade right now. You've got very low risk in the trade, but you also have lower probability. Right? So depending on your personality and the way you approach the markets, right, some traders look at this and go, well, hey, there's my impulse move. There should be a corrective move. And if I take the trade right now, I've got a low risk, right? Low risk with massive profit potential. And there's absolutely nothing wrong with that. Right? But if you're struggling on the side of, I've got more losing trades than winning trades, okay, what you want to start to do with your trading plan is gear yourself more to waiting for confirmation, waiting for strength to go long the market, waiting for weakness to go short the market before taking entry. Right? So what you have to wait for is the buyers to then pivot this and take control and push this back up. And then once they do that, enter with the institutional buying coming into the market. Right? So that's your little lesson right there. So we'll kind of come back on this. And this is the S&P futures. Now, another thing I want to kind of demonstrate for you is this is the S&P futures. And a lot of individuals out there watching this right now are fearful of the futures market. I don't get it. I don't understand it. It doesn't matter. Right? It's important to understand the market. You're trading to be able to manage your risk correctly. But what you'll see here is candlesticks are supply and demand, and supply and demand control everything with a financial value. Absolutely everything with a financial value. The valuation of a car, a house, your time, right, is all based on supply and demand. And if you've got a skill that not many people have, your time's gonna be more valuable than someone that has a skill that everybody has. Right? So supply and demand controls it, and that's all these red and green candles are the language of supply and demand. So let's go over, let's take a look. Same lesson here, but let's look at it from a stock format, and we're going to look at the Dow Jones Industrials Exchange Traded Fund. So same principle on the weekly time frame. We've come down, we've hit the demand level. Right now, I want to take this trade on strength. Right, I want to make sure that the institutions are committed to buying this, and this is going to push us back into a uptrend before entering and putting hard-earned money at risk. So we've got the buy area, right, being demand, this unfilled buy orders of institutions right here. And if you don't know how to identify supply and demand or read supply and demand in candlesticks, then you got to come over and get involved with the trader boys here and get involved in that trader room. So last couple of days, I've shown you exactly how to do that, where to go, traderboys.com, go to plans and pricing, and subscribe. So make sure you make that happen. And we're going to be going through supply and demand over and over and over, so you can get a better understanding of that. Now, if you come down here, let's look at the 5-minute time frame here. Let's go back to a 15-minute chart, better example for you. On the 15-minute chart, right, to get confirmation the buyers are taking control, that was a little supply area. Same thing we saw on the S&P 500. We've got to get above that. Now, ideally, what I want to see is a closing above this, and we didn't get that. We did trade above into the 5-minute supply area here, but we did not close above. Right, so to have greater conviction and greater strength in the market, the closing above it is really, really important. And you can see here we got the same retracement had taken place, right? And let's see if we got the demand level here. And I believe we're going to break that demand level, and we do. We got a little demand level here on the 5-minute time frame. You can see we're just broken below that. Okay, so right now, right, we don't have buyers in control. Right? And we don't have any permission to put any money at risk going long the market, trading in the upward direction of the market, right, at this point in time. Now, if we get this little candle here to form, right, and not break down any further, okay, then what we can do is you're going to have a very low risk entry. Okay, so running on a 5-minute time frame, so every 5 minutes these candles finalize. right? And you could take an entry here, right? Coming right above this candle's high, stop loss just below the low here. Now understand you're still carrying lower probability than entering up here, but your risk is so low. If this trade doesn't work, okay, you're gonna take a very, very, very small loss. And these are trades where we've got the probability not coming to our favor, right? Because we're gonna come in and enter on momentum of buying coming into the market, but with very, very low risk with a huge upside potential. So this is starting to form the way we'd like to see it. Now, as we look at, let's say I wanted to take the trade on the indexes here, either the S&P or the Dow Jones Industrials, the two markets we're looking at, to get a gauge on whether I should or not, is you should be looking at big tech. You should be looking at big tech. Now, big tech doesn't have a big influence on the Dow anymore because Apple, you went through its split. But you should be monitoring big tech to make sure big tech is doing the same thing. It's coming into demand levels, and we're going to get a pivot on big tech. If we go over, let me walk you over, and we'll switch over and take a look at the charts on big tech here, so you can see how do we correlate these markets to stack the probability and the odds in our favor. Right, so these are all the principles. The process of trading successfully is stacking the odds in your favor based on institutional activity. Right, if you get that skill set, you can get consistent profits in the financial markets. If you don't have that skill set, you got to think about this. The market is the kind of the largest playing field where everyone's going to the market trying to make money, which means everyone's trying to take money from somebody else in the market. Now, the one with the most skill is going to be the winner. One with the least skill is going to keep donating to, writing donation checks to multi-billionaires in the markets, institutions. So you've got to think about, what skill level do you have, and what's your probability of coming out, on top with consistent profits in the markets. Now, consistent profit means you still have guaranteed losses, but they're going to be minimal. They're going to be a lot less of them by what I'm walking you through in this little lesson right now. So let's switch over, and we'll take you through, and we'll take a look at the big tech stocks here. Let's see. We'll come into this window right here. So we got big tech. We got Apple on the top left, Tesla right beside it, Microsoft, Amazon, Facebook, and Google. Right, so this is right now. This is the controlling factor of the entire stock market right here. Now, if you look at these are all 30-minute time frames, except for Microsoft's on the 15 here. But you'll see this morning we had the gap down, big push up. We hit the supply level as the S&P and the Dow were going into supply as well. Right, so with these big tech companies hitting supply, there's Tesla hitting supply. Here's Microsoft hitting supply. Right, Amazon hitting supply. Now you can see all these big tech stocks did not get through these supply areas. They did not take the sellers out. Right, so we don't have confirmation of strength in big tech yet to get long the market. Right, they didn't break through. So at this point here in big tech, sellers are in control. Right, buyers have not taken control. Sellers are in control. Here's Facebook. Right, Facebook came up, and there's previous resistance became support. We hit that area there. Here's Google, right, coming right into a supply area, could not get through. So same principle. Right, now, what big tech needs to do is, again, we'll come down a smaller time frame, just for illustration purposes, but it's got to generate and create a higher pivot low. Right, so there's your little demand level in the 5-minute time frame. You can see right here we broke below it. That's not promising. That's not good for big tech to pivot and go up. We couldn't get through supply, right, and we couldn't hold demand. So we can't get through the sellers here, and the buyers can't hold against the sellers here. Who's currently in control of the market? Sellers are. So until buyers take control of this market, I am not entering long this market. So some people look at this and go, well, if you can enter lower and it goes up, you'll make more money. That's true, but you don't have the odds stacked in your favor to make that happen. Right? So at this point, I'm not looking for entries long this market until the market tells me and gives me permission to do so. And right now we don't have that. We just don't have it. So continue to watch these markets. Right? In big tech, I want to take out these highs here, okay, get through these supply levels, and then wait for retracement. Then I'll have permission. And I'm happy to sit in my hands until that takes place. Right? Not a problem at all to have the odds and probability stacked to my favor. That way we can come into the markets and not be stressed and emotional going, is it going to work? Is it not? And I'm glued to the screen watching the charts 24/7. I want to be able to put a trade on and walk away because I know I've got the odds stacked in my favor. And if I take a loss, it was the best damn trade I could possibly take in, because you guaranteed losses, but it'll be a small loss. And I'm one step closer to taking in a profit, because we're always stacking the odds in our favor. So there's your little lesson for you. Coming live from the Trader Boyz right here, trading room. Get involved. Get onto traderboyz.com. Come in, check it out. Right now, you're going to have a week free. But if you put in code 143, you're going to get a month free. Make it happen. Come check us out. See if you like it. The trades I've been putting out there, the little lessons I'm going to put in there are invaluable. Invaluable. I mean, it's only $69 a month. It's not hard to make that money back. I mean, you basically get risk-free, cancel anytime. So we'll see you in there real soon. So we can walk you through, look for some more lessons like this, more opportunities. We'll talk to you tomorrow.